I wanted you just to kindly remind us of how ARK invested in SpaceX, the sort of venture mechanism that you have, and then we'll go into the thesis.
Yeah, so SpaceX AI is the largest position in our venture fund, which is an interval fund that anybody, not just the rich, can invest in. And we did that because, as you can see from the retail demand for the IPO, people understand kind of like the potential power of these innovation-focused companies, and we think that everyday people should be able to get access to these AI exposures, including OpenAI, Anthropic, SpaceX, which are the top positions in the fund. And so we've invested in SpaceX, as long as the vehicle's been available. And, from the inception of ARK, we had reusable rockets as a breakthrough disruptive technology. And so I've done work all along the way demonstrating how being able to reduce cost of launch from $10,000 to $1,000 to, we think, much less than $100 with Starship actually unlocks huge market potential, certainly on the Starlink side and kind of as a second stage on the AI side.
Okay, and for AI, one needs data centers. We need, therefore, maybe data centers in space. This is the entire pitch that we now go through. Your workings, your numbers, your thesis on orbital data centers, Brett.
Yeah, well, what's interesting about the SpaceX IPO is you actually don't need the AI business to really work that well in order to actually get a great return on kind of just the Starlink business. So, Elon and co, they are saying they're going to be able to launch tens of gigawatts per year by the late 2020s. So an easy way to think of a gigawatt, you can rent it out at the current market rate over the long term. It's something like $15 billion per gigawatt. So imagine launching tens of gigawatts times $15 billion, so $300 billion in incremental revenue in any individual year that you're doing that. The reality of their AI business today is, on a blended average basis, they have just rented capacity to Google and Anthropic for just a little under $40 billion per gigawatt. So actually serving it as an infrastructure, as a service provider, could be a wildly lucrative business for them, because they can build assets on the ground so efficiently, and once they launch into space, they can build it efficiently.
Brett, you are, as a firm, regarded as some of the most bullish on Elon Musk, the individual, and the plan that they outlined in the prospectus. But there, of course, are risks, right? Musk posted on X last night this idea that 1 million tons to orbit will be possible in roughly 5 years. Starship on paper can do 150 metric tons on paper, right? You do the math. That's 1,333 launches a year, every year for 5 years to do that. You would concede, right, that it's a long shot.
Well, he always lays out super ambitious targets for his companies, because that's the way he's found to make his workforce most effective at actually delivering world-changing technologies. Think about it this way. Just look at the Starlink business and imagine look at SpaceX, imagine instead of launching Falcon 9 rockets, I'm launching Starship rockets at the same cadence filled with Starlink satellites. That alone would get me, in 2 years of launching, to roughly a little under $200 billion in revenue. So you don't have to make an assumption that the company is going to be launching, at even 1,000 launches a year in order to get into the kind of, mostly on Starlink, $300 to $400 billion in revenue by 2030. So there's this discourse out there that, hey, this company on a price to sales basis on the immediate term looks very expensive, and poor retail is investing in this thing because they don't understand. The whole point of capital markets is you raise capital and then you deploy it in high return on invested capital businesses. And Starlink alone it's a 6-month cash on cash return for 5-year linked satellites. They're going to spend $500 million building or launching a rocket filled with satellites and acquiring the customers, and it should generate them $1 billion plus per year over the 5-year life of the satellite. So that's a great business.
So Brett, I mean, unarguable, if you think about how much you've returned, 25,000% has been returned since Tesla went public. But what is also unarguable is, as it stands, SpaceX net loss $4.28 billion on revenue of $4.69 billion in the first quarter. When does it become positive? Does it need to become positive? Are you happy it being loss-making for the foreseeable because the revenues are just going to go so astronomically high?
No, I think that profitability, at least as we have it modeled, happens very quickly as they launch the Starlink satellites. It really depends upon how much capital they are throwing at terrestrial data centers to try to catch up with the frontier labs in terms of Grok's capability. Right. You can build an amazing business just basically renting compute to others and running Starlink, but there's clearly both an ambition and then a higher margin in actually kind of like competing with Anthropic and OpenAI. In our view, that probably doesn't happen until SpaceX is launching, Brett, multiple gigawatts into orbit.
I'm sorry to interrupt you. There is a disconnect, and that many people share this thesis, right? The TAM number in the prospectus, 26.5 trillion, was for enterprise AI, and I appreciate there's sub-buckets. In the here and now, they've basically played a blinder with a ready-to-go neocloud business. And lots of people keep telling me, like, in the end, it doesn't matter if Grok works or is competitive against Anthropic and OpenAI. They just rent out the capacity, and that will fund the out-of-this-world ambition. What would you respond to that?
I think that's possible. As in the way in which we model the business, that is the more likely outcome. I think to compete, to get to the frontier by 2030, you'll need between 30 and 50 gigawatt years of compute and training. Because XAI started later and they're trying to build their own infrastructure, it's very difficult for them to catch up on that amount of kind of R&D compute thrown at their model, with the caveat that if assuming that they merge with Tesla over the next couple of years, cash flow from Tesla could actually fund catch-up for them.
You assume that?
I think it's a reasonable assumption, or more likely than not, after the company lists and its shares are all floating, that there is a merger between the entities. It makes a ton of strategic sense. And as we model Tesla, like the cash flow flowing off Robotaxi, they can't effectively deploy it. So, I'm not going to want a special dividend out to shareholders for Tesla. I want them to continue to reinvest in growth. Optimus, the robot business, requires, it's not capital constrained, it's really like capability constrained. And so, whereas SpaceX actually can use additional capital to continue to accelerate growth.